Did you know that getting a loan with cryptocurrency is often far less more complicated than getting a loan with a traditional bank? On today's CoinMarketCap tutorial, we will discover the benefits of taking a crypto loan, how they got started, and of course getting into the practical, and talking about how to get them on centralized exchanges and on DeFi. So make sure to stick around until the end. Welcome to CoinMarketCap's Tuesday tutorials, where we make it easy for you to get the most out of all the crypto tools out there. I'm Trev, and here at CoinMarketCap, we love making videos about all things crypto. So if you want more videos like this one, then make sure to hit the like button down below. Crypto enthusiasts are often encouraged to HODL their assets, keeping them safe in a wallet until the price of their currency appreciates. But just like how you feel uneasy leaving your cash in a bank account with low interest rates, a common question arises, which is how can you get your digital currency to grow? And this is where crypto lending comes in. So let's imagine that Steve has 2 Bitcoins, and he doesn't want to sell any of it because he thinks that the price of it is going to go up substantially. But Steve's also worried that if he doesn't end up offloading his crypto, there'll be a risk that he ends up with less Bitcoin if he buys back at a later date. Crypto lending platforms can come to the rescue here. Typically, Steve will be given the opportunity to use his Bitcoin as collateral and receive a loan in stablecoins. He will normally have to over-collateralize, meaning he'll have to lock up more Bitcoin than the overall funds that he's receiving. And this is because of the volatility of digital assets. But once that loan is repaid to him, plus interest, his crypto will be returned in full, and he'll make a handsome profit if his Bitcoin ended up appreciating just like he thought it would. His crypto would only be at risk if he failed to keep up with the loan's terms, or if the value of the Bitcoin held as collateral fell below the value of the loan that he received. So crypto lending started to take off around the time economies came to a screeching halt in 2020 due to the pandemic. This saw interest rates get slashed, and lending for big ticket items took a nosedive. So as many people were looking for other ways for their assets to work for them, crypto loans became a quick and easy way for people to get access to fiat currencies almost instantaneously. And all of a sudden, the days of Bitcoin and Litecoin gathering dust in an exchange or cold wallet were numbered. Unlike personal loans or credit cards, collateralized loans are much more secure for the lender, which enables the borrower to take advantage of cheap interest rates. Cryptocurrencies are very volatile, which is why these loans are almost always over-collateralized. This provides insurance for the lender should the price of crypto just completely plummet. However, this can negatively impact the borrower, especially if the platform they use requires them to always maintain their loan-to-value ratio. One of the major bonuses that people see in a crypto loan is that unlike traditional banking, you won't be subject to your credit score being accessed. This means that lending is often more accessible for people who don't have a financial history, underbanked customers who don't have a bank account, and self-employed workers who struggle to access credit because their fluctuating earnings don't meet a bank's strict lending criteria. And repayments can also be more flexible. And where it takes several days for a loan to clear in the old-fashioned financial world, Bitcoin loans can be practically instant. You'll also be able to make your assets liquid without triggering a taxable event, and you can adjust the loan to suit your needs. Users can also switch between crypto assets, so you can deposit Ether and borrow Tether all on the same platform. If you like the sound of a Bitcoin loan but you don't know where to start, you have 2 main options: centralized and decentralized lending platforms. Centralized ecosystems such as BlockFi, Nexo, and Binance all have to follow strict rules to stay compliant. You'll have to create an account on your chosen platform, and you'll then have to go through KYC or know your customer procedures. And these are in place to prevent fraud and money laundering. These platforms typically have protocols in place to ensure that your collateral is safe. Some protect crypto assets via insurance, or keep the majority of their digital assets in a custody like a cold storage, meaning they're away from an internet connection. Centralized crypto lending platforms will still record all deposits and withdrawals using blockchain technology, visible to everyone, and offer a great way to earn interest on Bitcoin, alongside many other cryptocurrencies and stablecoins like USDC and DAI. To put it in perspective, the best USD savings account usually only hold for a 1% APY, yet many platforms offer 8% on crypto interest rates. But it's worth doing your homework to get the best deal, and also to avoid any other unwanted fees. There's more paperwork involved in getting a loan through a CeFi platform, but the fact that there's a regulated environment and a customer service representative who's just a click or a phone call away could make these platforms more appealing to traditional investors. The second option for crypto lending would be to go for a decentralized platform. or DeFi for short. Unsecured crypto loans, also known as crypto loans without collateral, are innovative new financial services that provide short-term liquidity and can be paid back in fiat or in cryptocurrencies. So the idea is to borrow funds directly from a lender using a cryptocurrency as collateral instead of a traditional asset such as property and gold. If you are interested in an unsecured crypto loan or crypto loan with no collateral, there are a number of platforms that make this possible. For example, flash loans are a popular example for crypto loans with no collateral, but they do require a high level of crypto knowledge to navigate. And before moving forward on any crypto loans without collateral, be sure to do your own research to see if the platform you're using is legitimate. DeFi platforms are completely decentralized, and transactions are handled by code rather than people. On services such as Aave, Compound, or DYDX, smart contracts use algorithms and protocols to automate loan payouts. Anyone can access these protocols on a decentralized finance platform, which makes them completely transparent because nothing can be hidden on the blockchain. Unlike CeFi platforms, there's no middleman or financial regulator, which means you don't have to go through a verification process like KYC. However, DeFi interest rates for crypto often pale in comparison to what centralized rivals can provide. Getting a Bitcoin or Ethereum loan on any other crypto loans or DeFi platform is very quick, as you won't need to pass any kind of due diligence. Thanks to smart contracts, all the user will need to do is apply for the loan and then send the crypto they want to use as collateral to a specified wallet associated with the lending platform. The users of decentralized lending platforms can apply for a loan of any size they want without having to confirm their identity with a third party. Loans can be supported in stablecoins such as USDC, or in fiat currencies, or in cryptocurrencies such as Ethereum or Bitcoin. And that's it for today's CoinMarketCap tutorial. With both types of lending platforms still in the early stages, it's clear that this is still an exciting space to watch. There's a lot of room for growth, but the potential to access borrowing without the usual formalities could be a game changer for both the people and the financial services industry. Let us know below if you guys want us to do a deep dive into all of the lending platforms out there. And as always, if you or your friends have any questions about crypto, just ask Alex in the description below. Thank you guys so much for watching this week's episode of CoinMarketCap's Tuesday Tutorials, where we make it easy for you to get the most out of all of the crypto tools out there. I've been your host Trev, and now I pass the challenge on to you. It's in your hands to get more people to understand crypto and all of its potential. So make sure to share this video with a friend or family member. Anyways guys, see you soon.